Buy and hold will no longer make you rich anymore. The real estate world is changing. The real estate game is changing. And if you want to survive and continue to create and build wealth in real estate going forward, then you have to meet the market, the economy, and understand what variables are at play here that weren't over the last 40 years. See, everybody that you've heard brag about getting rich in real estate, the maybe the rich uncle, the neighbor, the guru that you saw up on stage at a conference, the influencer in your feed, many of them didn't win because they were smarter or more skilled. They won because of timing, a little bit of luck, and the fact that they stood on a 40-year escalator that only continued to go up in value. But here's where things changed. Post-COVID, 2022, a few years ago, that escalator stopped, or at least it changed in a really big way. And if your whole plan is to buy, hold, and get rich in real estate like many of them did, then you need to understand how the game has changed. We're going to talk about that in today's episode. What's going on, guys? Welcome back to another episode. As always, your host, Matty A, talking about how to get wealthy and rich in this wild world of investing that we live in. So I'm going to take you back a little bit to 1981. And in 1981, the 10-year Treasury sat at 15.68%. Today, 4.5%. Which, again, feels really expensive right now, right? Think about having the 10-year Treasury at 15.68%. Pretty wild. But the 10-year Treasury, as we all know, is the interest rate that basically everything else in the economy gets priced off of, specifically debt tied to real estate assets. Now, if you look at the chart that I'm looking at, that 15.68%, if you follow it from 1981 all the way to 2020, it goes basically straight down for the next 40 years. One direction, going down a long, steady line all the way down to 0.55% by the summer of 2020. Now, we all know what happened in 2020. We know where the economy was at. The Fed lowered the 10-year Treasury basically to zero, almost free money. And here's what nobody really connects is if you bought income property anywhere in that 40-year time frame from the 15.68% all the way down to the 0.55% on the 10-year Treasury, and all you did was just buy and hold real estate, you didn't need to be good. You didn't need to be great. You could actually make a lot of mistakes during that time frame. And the fact that rates continued to fall the way they did, it did all of the work for you. Cheaper money does one thing to the real estate economy. It brings in more demand for the supply, and it continues to appreciate property prices. So anybody that had real estate during that time frame got the benefits of those tailwinds, and their properties got more and more valuable every single year. So basically, a whole generation bought, held, they refinanced into a lower rate, right? They pulled tax-free cash out, probably redeployed it into other investments, did it over and over again, rinse and repeat, and got all of the benefits and built wealth through that process. And at the end, they looked at their net worth and they probably told themselves a story. I'm a genius. I'm a real estate investor. I'm a buy and hold guy. That's how I got rich, right? But at the end of the day, if you really strip all of that down, it wasn't genius. It was just getting the benefits of economic variables that created a lot of upside for anybody that happened to be utilizing this investment strategy. And now, of course, I got to give credit where credit is due, right? They took the risk and they never sold. But we also have to be honest about what really happened here. This was more of like a bond trade wearing a real estate costume. And, I see a lot of people talking about this strategy. And if you've bought any kind of real estate recently or tried to buy any real estate recently over the last few years, and you've tried to layer in leverage, debt at the 4.5 or wherever the 10-year Treasury was when you were trying to, buy real estate, you realize that it's hard to make the deals pencil. The amount of time and the energy and the risk and the operating stress and the headaches and the management and all of it that goes into buying real estate because of debt being more expensive, the cash flows are significantly compressed. And oftentimes you go, well, if that's all that's left after all of that energy, risk, stress, I might as well go put my money into the stock market, which is doing a lot better. And I don't have to do anything. I can just sit back on my hands, right? So unless you've got a way to add value to real estate, you basically are just betting on that line of the 10-year Treasury, hoping that it's going to continue to go down. And we all know, based on what's happened over the last few years, anybody that did that is in a really rough way right now. Values obviously have gone down. Cash flows have been compressed. And a lot of the stress and the challenges that have ensued because of what's been going on in the real estate economy as a result of the 10-year Treasury going up has led to people getting foreclosed on, handing keys back on, capital calls, right? Syndications going belly up, all kinds of crazy stuff. So this idea of buy and hold real estate is not as simple and easy as it once was. So let's talk about, right, the equation that runs all of real estate, at least commercial real estate, is value equals NOI, the profit that the building throws off, divided by the cap rate, which is just the market's required return. So the magic in this is when the cap rate falls, the value rises, even if income really never moves. And when you think about, the people like the rich uncle who bought a strip center in 1990, and let's say that, $100,000 a year in income at a 10 cap rate, that's $1 million building. He does nothing for 30 years except ride the wave of, the lowering 10-year Treasury. Let's say the income stays about the same, but rates collapsed. So now the same building that was trading at a 10 cap, 10, 15, 20, 30 years ago, is now trading at a 5 cap. $100,000 divided by 5%, do the math, that's a $2 million building. So his building doubled and he really never lifted a finger and the income just stayed the same, which we all know most of the time income rises and goes up over time in a lot of these properties. So then he refinanced into a 3.5% debt loan. He pulled some cash out, tax-free, and that's the whole legend of buy and hold. It's beautiful when it works. I've done it a handful of times. And again, I'm not any smarter than you are. I just happen to be invested in an asset class that got the benefits of all of these economic variables that were tailwinds working in the favor of real estate. So it was cap rates falling from 10 to 5, which was rates falling from 15 to 0, really doing all of the heavy lifting and 100% of the work. No magic, silver bullet, no special skill set above and beyond what anybody else could duplicate. So here's the entire episode in one sentence. You cannot fall from 0.55% again. There is no more room. That tailwind has already been spent by many of the people who became before us. Hey, what's up, guys? I'm so excited to announce if you are an investor looking to generate consistent passive income, then I've got something for you. I just launched the Imagos Income Fund. It is a private investment debt fund. So instead of relying on long-term appreciation or big exit events like most real estate syndications do, we decided to keep it simple. Focus on first position, asset-backed lending just like a bank, meaning your investment is backed by real collateral and structured to produce income from day one. The target return, 10% paid out annually and also paid out monthly. So no guesswork, real passive returns, true mailbox money. And because we're in the debt position, not equity, we're able to prioritize downside protection, maintain shorter durations, and stay in control of the risk, which is most important in environments like this. This is built for investors who want steady cash flow, strong capital preservation, and real asset exposure without the headaches of owning, managing, and waiting years for a payoff. So if this resonates with you, if you want to learn more, I put together a full investor presentation breaking everything down. All you got to do is just text the word income to 844-447-1555. That's income to 844-447-1555. I'll send you everything so you can see if it's a fit for your portfolio. So you can't just sit around waiting for cap rates to bail you out, right? CBRE, the biggest brokerage on the planet, is projecting cap rates compress maybe 5 to 15 basis points this year, which is really nothing too substantial or significant. Next to the 1,500 basis points of decline the last generation enjoyed. So that's a major delta there, right? And even the bull case today is a whisper compared to what those people investing during that time frame were able to take advantage of. So here's the line that should wake you up. CBRE is now telling institutions in writing that returns this cycle will be driven by income, that asset selection and management, the operators, those are going to be the key drivers. So if you want to, read in between the lines there, the smartest money in the world just admitted that the market won't make you rich anymore. It's the operators. It's the people who are going in and driving income, reducing expenses, increasing net operating income, and stabilizing and protecting those income streams tied to that asset. So here's my take. A huge chunk of the real estate wealth you look up to, at least that I know I looked up to, was really luck wearing a costume called skill. Warren Buffett said it best: only when the tide goes out do you see who is swimming naked. Well, that tide has gone out on the entire buy and hold generation right now. And a lot of so-called geniuses are already getting exposed or are about to be exposed. Howard Marks, the billionaire who built Oaktree on distressed debt, he wrote a whole memo on this. He called it the sea change. His argument was that the 40-year fall in interest rates was the single biggest driver of investment profits for decades, and now it is over. And the people who succeeded riding it are going to need a completely different approach. A billionaire said this thesis first, and this is something that we should be listening to. So it doesn't mean that you can't get wealthy in real estate, right? I don't want you guys to think that. I'm still investing heavily in real estate, and I'm going to continue investing in real estate. That being said, what once worked doesn't mean it'll work forever. And we have to be realistic to the idea that we need to pivot and adapt and change if we still want to win long term. I don't need to be right. I just want to win. And so in order to win, what the data is telling us is that we are entering and in a different investing landscape than we once were. So the game just got a little bit harder. And that is the best news that I think I've heard all year, because I like to think of it through a contrarian lens, right? Let's think about this for a second. When the market makes everyone rich automatically, your skill is really worthless, right? You're competing with every lucky person who happened to be born at the right time or in the right market. But when the tide goes out, when the market hands you nothing, this is where the skilled operators and the skilled investors really get to reap some rewards. The only people who win are the ones who actually know how to operate. And most of your competition didn't learn how to do this at a really, really high level. So the people who are good operators are going to crush it over the next few decades. And if you're not a great operator, partner with a good operator. If you are not a great operator and you want to be a great operator, right? Like, find ways to enhance and elevate your skill levels in all of the verticals of operating real estate assets in whatever asset class you want. And you're going to build a moat around building wealth for yourself and for your investors or partners for the rest of your career. So That's where the edge is in this entire story here. So what do? Well, let's talk about a couple moves that you can do as a real estate investor. Number one, buy for basis, not for the bet. Your safety is a price per foot below what it would cost to build that today. You hear a lot of investors talking about get below the replacement cost, right? So that has nothing to do praying that rates fall and that you get all the benefits of it. You make your money on the buy, you actualize it over time. One of the best ways that you can protect your money is to get it below replacement cost. Buy your basis, get it as low as possible. Number two, underwrite for today's rate, not for tomorrow's hope. How many investors are in a really bad spot right now because they said, oh, rates are going to come down, we'll be fine, right? 3 years, 5 years from now, rates will be way lower than what we're buying at today. And guess what? That's not the case for many of them. And their deals are either getting handed back to the banks or they're doing capital calls on their investors. So underwrite conservatively, even maybe a little bit higher than today's rates, just to be safe. If the deal doesn't work at today's current 10-year treasury or whatever your bank is going to give you, then it doesn't work. The rates will come down. Ideology is not an assumption, it's a wish. And wishes don't service debt. Number three is force the income. Find ways to drive income. That's the alpha that you can capture in your deals. So if you see opportunities, right, and they're not just based on sitting back and just letting the buy and hold strategy of doing nothing work in your favor, but if you have real strategies on how you can drive income, this is the whole game now. Lease up the vacancy, push the rents to market, figure out ways to cut and reduce expenses, find new bolt-on income streams to whatever asset class you're doing. You're not a landlord who can just sit back and own anymore. You have to think that I'm an operator who find ways to optimize and build on top of these assets. And with technology and all the cool stuff that's out there nowadays, you can do this. You just have to be creative, right? You got to have real skill. And this is where you're going to find real edge and alpha. So every dollar of NOI that you manufacture is value you created that the market can never take back from you. That is your moat. Now, number four, you got to control your debt. So finding opportunities, finding partnerships with lenders or banks that you can find advantageous debt, whether it's fixed rate debt, it's longer term debt, it's longer amortization. Do not repeat the 2021 mistake that most people made, which is all these geniuses who loaded up on cheap floating rate bridge debt. They got vaporized when it came to going to refinance, and rates were double what they had modeled into their deals. Number five is rent a real tailwind to replace the rate one. The rate wind died, so go for demand-driven wind. What I mean by that, CBRE is literally calling well-located, grocery-anchored, necessity retail some of the best risk-adjusted returns in the market, right? This is where real demand lies. So finding assets where real demand becomes your tailwind, right? That's not financial engineering. That is just knowing what the market is needing and wanting and knowing that that demand is going to be there and be the backstop to your asset. So, I believe that, and I'll just use my example on Pirate Plaza, right? I'm not sitting around waiting for the market to just hand us a win because it won't. I bought this deal well below replacement cost. I brought in national tenants like TJ Maxx and Harbor Freight, right? These are necessity-based tenants that aren't going to be going anywhere. That obviously drives income way up. We found ways to reduce expenses, convert to triple net leases, and drive up NOI, which drives up the value of the asset. I used the city to help give a forgivable loan, which helped cut the basis even further in the deal. That's forced value, right? That's value add. That's real, true operator skill. And this is stuff that you guys can do too. I'm no genius, but I do know the levers that need to be pulled or can be pulled. And I focus on those things because that's what creates a moat around building real wealth in real estate investing. So if I grow that income through operations, even at a flat cap rate, right? The value is going to jump up. So that's not because rates moved. That's because we as the operators moved and executed on a business plan, and every asset can have a very strategic business plan. That's the new way to win long term. That's the new way to create real wealth in real estate going forward. So, look, the 40-year cheat code, they figured out how to, patch it up and not allow any of the bugs to get in anymore. So buy it and pray and hold forever. It's just not a winning strategy. Can it still work? Yes. Many cases it can still work, but um, it's going to require a lot more skill to be extremely successful in building wealth in real estate going forward. Um, so if you're willing to be an operator instead of a spectator, you're going to win and you're going to do extremely well in real estate. Mark my words. The people who are hands-on, great operators, good brands, they're going to not only win for themselves, they're going to win for them and their investors. They're going to get great reputations. They're going to get more money thrown at them. And those people are going to be we'll call them the horses that many other investors are going to want to jockey up on and run the race around the track with. And you guys can all win together. I want to see you win big there. So the market used to make you rich. Now you got to make yourself rich. And honestly, I'm okay with that because I'm going to bet on me. I'm going to bet on you to go out and find ways of being successful as a real estate investor. So I'm curious on your thoughts. You let me know what you think. But man, getting rich, buy and hold real estate, it's just not going to be as easy as it once was. And I'm okay with that. As always, appreciate you guys tuning in. If you enjoyed this, share it with somebody else that you think could get some value from it. Keep investing in yourself and your wealth on your march to $1 million and beyond. We'll see you guys in the next episode. Well, that wraps up today's episode. Thank you so much for tuning in. As always, you guys know this show would not be what it is without you, the amazing listener, the support, sharing this out with other people who can gain value from it, taking 60 seconds to leave a review. If you haven't done so already, those things mean the world to us and ultimately help us spread this message out to as many people as we possibly can to help them on their wealth building journey. If you have any particular links or resources that you're trying to track down that were mentioned in this interview, be sure to check out this episode at millionairemindcast.com, where you can find access to all that information. And of course, if you haven't checked out the Wise Investor Vault yet, be sure to head over to wiseinvestorvault.com to check out all the tools, all the resources, the checklists, the spreadsheets, the trackers, all kinds of amazing things that can help you on your wealth building journey at the wiseinvestorvault.com. If you haven't connected with me on social media yet, I'm consistently putting out more content, stories, value to help you on your wealth building journey. And one of the best and most exciting things for me on a weekly basis is getting to connect with you guys. Getting your DMs, hearing what things impacted you, what you need help with is a big way that we continue to drive the content for this show. So if we're not connected and following each other on Instagram, on social media at Official Matty A, give me a like and a follow. Would love to connect with you there. And of course, don't forget to get on my deals list. If you're an accredited investor, you want to look at more deal flow. You want to see what deals I have access to, what deals I'm raising capital for. This is an exclusive list that I only put out to my accredited investor list, my Millionaire Mindcast family. So text the word deals to 844-447-1555. And with that being said, thank you again so much for supporting the show. Until next week's episode, keep investing in yourself and your wealth on your march to $1 million and beyond. Cheers.